So Hurricane Ian takes Florida by surprise, and they're projecting over $283 billion in damages. How does this affect insurance companies? How does this affect you and I, investors? And what's going to be the long-term effects of everything that's going on? I want to cover all that and more for you guys in this short video and explain to you guys a little bit of what happens. Anytime that the National Weather Service projects that there's a major storm coming, insurance companies stop underwriting insurance claims and they stop underwriting insurance policies indefinitely until the storm actually hits. And they have as much due diligence time as they need in order to start rewriting policies over again. Now, one thing that was news to me that was really surprising was that this only affects people that are buying homes that are going through mortgages. And in the state of Florida, only 50% of home buyers have a home mortgage. Home buyers right now actually pay cash on 50% of the purchases through the state of Florida. So if you're a cash buyer, you want to buy the home, you don't necessarily have to get your you don't necessarily have to go in and have home buyer's insurance and homeowner's insurance in order to purchase the home. You're buying at your own risk. So what happens to these folks if they have no insurance and the storm hits? They're completely X'd out and have no type of recourse to the insurance companies other than themselves. And so, not a great standpoint. Anytime we go in and we purchase real estate cash, it's one of the most important policies that we write. So in spite of how anxious you are to close or how much pressure the seller is putting on somebody to close, I would indefinitely hold off to make sure that my insurance policy is set in place. Here's something that most homeowners do not realize. So in the state of Florida, their property insurance is over 40% higher than the average U.S. American pays for home property insurance nationwide. And with everything that's happened right now, they can charge up to an additional 40% on premiums for what's called the Hurricane Relief Fund, just in case a natural disaster like this happens. So homeowners in the state of Florida could be paying in excess of 80% more than the average U.S. American pays for homeowners insurance just to live in the state of Florida. And what most homeowners don't realize is that most insurance companies do not cover flood insurance in natural disasters. They'll cover wind damage, but not flood damage. So if your house gets flooded and we have 18 inches, 24 inches, 12 inches, 2 inches of rainwater in a dwelling, and you get toxic mold, or you have wood rot or any other type of damages that happens due to flooding, those are not covered through your typical insurance company unless you have a rider which overrides that and you're paying an additional premium that covers you for those policies. But the average policy does not cover that. In spite of that, insurance companies could be put in an insolvency due to the storm. And what insolvency is their inability to pay out claims, and they land up going bankrupt. Now, understand that the Florida insurance market was already in financial distress prior to this storm, and so this storm just put additional weight on their shoulders. Now, in spite of this happening in the state of Florida only, one thing that homeowners should be aware of currently, right now, and business owners, is that anytime there's a natural disaster, we still feel these rate increases nationwide. We'll see it in our homeowners insurance. We'll see it in our automobile insurance. We'll also see it in our workman's comp insurance. We'll see it in our general liability insurance. We'll see it in all our insurance policies across the board. Every single year when our premiums renew, I go to my insurance agents and I ask them, I say, look, this is X% higher than last year. And then I go out and I shop insurance through other brokers. And the reason that I go out and I start shopping insurance through other brokers, and one thing that I've noticed since the last natural disaster, even down in Florida when the tsunami hit a few years ago, and then the big natural disaster out in Puerto Rico and Florida just a couple of years ago, and now we have Hurricane Ian that is catastrophic in the state of Florida again. And so what's going to happen is your insurance rates are going to land up going up indefinitely nationwide. And the excuse from your brokers is going to be the fact that Florida got hit so hard, because a lot of these are not local Florida-based companies, these are national companies. So if you have companies like the Hartford, Ohio Casualty, you have companies like State Farm, Farmers, Allstate, and all these insurance companies, they're all absorbing a piece of what's happening in Florida, which has to get distributed nationwide. And so one of the big things that you got to pay attention to is your annual rates and what's happening, not only now, but next year when you renew your rates, and question your insurance brokers as to how it's affecting your home homeowners insurance, your personal insurance on automobiles, as well as your business insurance as far as workman's comp and general liability. The market will balance out. It always does. But we're going to feel it economically. In spite of what's happened nationwide across the United States with the pandemic and across the world with the pandemic, we're going to feel what's happening right now with a hurricane in Florida indefinitely for the next 1 to 2 years. This is about a 2-year fix. President Biden has come in. He's also signed a bill that has allowed for grant money to be distributed for homeowners in natural disaster relief, which will give people some type of relief on their on the reconstruction of Florida. Now, to what amount, we don't know yet. So what does that mean for investors, and what does that mean for you guys out there that are buying land, building houses, and taking advantage of what's happening in Florida right now? Understand that there's more opportunity when there's financial distress or physical distress to any market. So I talk about this to help people understand that in spite of what's happening, we can't fix what's already passed, but we can go out and we can capitalize upon it. So as these insurance companies start to go bankrupt or don't fund, or they start denying the rebuild and policies, and all our government agencies and the relief funds that are available start to get exhausted, what ends up happening is there's opportunity on the board for people like you and I to go in and scrape up the pieces, sweep them up, and then take advantage of some of what's going to happen as far as opportunity in these areas. So as far as Florida residents, as far as investors outside of Florida or investors right in with the state of Florida, this is a great opportunity to start paying attention to what's going to happen in the market, in the Florida market in particularly, because in spite of everything that's happening with high insurance rates, lumber is going to get affected. We're going to see lumber prices nationwide go back up slightly by next summer because of supply and demand. As the recessionary market starts to turn and the tables start to tip a little bit, we're going to see housing start to go gangbusters again, or at least stimulate a lot more than what it is right now. And as that happens, the supply and demand we're going to have a lot more need for supply and a lot more need for the demand of more housing. And with the lack of housing and the rebuild in and in itself in Florida, we're going to start seeing lumber prices skyrocket again. And I don't know if skyrocket's the right word. I would say we're going to see lumber prices go up again, not indefinitely, but temporarily, as the supply and demand starts to come back down for lumber and the rebuild through the natural disaster and Hurricane Ian in Florida. And so what that means for you guys right now, as far as the rebuild process, is to start paying attention to short sales, foreclosures, and what's happening with insurance companies as homeowners have no relief financially to rebuild these estates and rebuild these single-family homes. There's a lot that's been hit here, from the commercial sector, multifamily sector, the industrial sector, from the single-family home sector, and it's the single-family home sector that's going to need to rebound first and the quickest. And then the commercial sector will have to go second. The multifamily sector is going to fall in line with the single-family home sector, and then the industrial and all the other industries like storage space, office, and some of these tertiary markets in the real estate sector will end up going third in line as far as residential than commercial. One thing that you guys should be looking for is you guys should be looking at opportunities in the single family and multifamily home sector, and you should also be looking for opportunity in distressed retail. Those areas, especially inner city, those will rebuild. And when that rebuilds, there's going to be financial opportunity for contractors and investors to take advantage of the upside. And so one of the big things that you want to start paying attention to now is short sales, is foreclosures, and how to position yourself with liquidity to be able to go in and buy, or set yourself up, and not with just liquidity, but the ability to raise capital to take advantage of what's happening in the market and what's happening in Florida in particularly. Now, the rest of the nation, we're going to feel a little bit of the sideburn of what's happening in Florida. But in spite of that, as interest rates start to lower, we're projecting into 2023, first quarter, second quarter, we'll start seeing opportunity in other market sectors around the nation as far as single-family residential, multifamily residential, but affordable housing is still going to win. So for those of you guys that are going in through the rebuild process of Florida right now, that are scraping land and going in to reposition assets, affordable housing would be the one sector that I would hyper-focus on, and the second sector that I would hyper-focus on is build-to-rent communities. And if you position yourself in those two sectors, you're positioning yourself to win over the course of the rebuild of Florida and over the course of what we're doing nationwide. If you like the content, click and subscribe to our YouTube channel. Give us a thumbs up. If you're watching us on repeat, hit hashtag repeat. Ladies and gentlemen, I recommend a video that I recorded live last week, and it's all related to short sales and foreclosed opportunities that are up and coming in the Florida market. It's how to understand how to take down short sales and how to invest in REO or bank-owned properties, which will come to the horizon of the Florida market sooner than later. Click below, subscribe to our YouTube channel, pound that thumbs up button, and I'll see you next time.